Hi everyone and welcome back to the channel. Today we are diving into the unique financial strategies of entrepreneur and real estate mogul Grant Cardone, focusing on his tricks on how to reduce our tax bills. But before we get started, press the subscribe button down below, a thumb up to support the channel and the bell in order to remain updated on our latest financial content. And now let's jump into the video. Cheers! Grant Cardone, with a reported net worth of roughly 600 million, has a fascinating approach to managing his finances, let's say. In one of his latest videos, he dropped some really serious wisdom, revealing his tactic of going broke twice a year. Yes, you heard it right, going broke. Sounds crazy, but it's true. And he does it for a really serious reason, that is reducing his taxable income. Right as well. Cardone explained that investing in high-value assets, like helicopters, and they can cost between $10 and $12 million each, he effectively manage a large sum of money at once, gaining assets and reducing at the same time his tax burden. It is a bold move that everybody can do. But you have to bear in mind that in order to be effective, you have to book all these expenses in a corporate financial statement and not on a personal account. Otherwise, the trick doesn't really work. And just to make it clear, Cardone isn't afraid to take some kind of calculated risk whenever it comes to his wealth management strategy. Given that, first of all, taxes are the number one greatest expense in our life. And beside the fact that tax is a necessary evil, we have to find a way in order to make our payment of taxes as efficient as possible. From this standpoint, we can say that his method of going broke shed some light on the creative ways that millionaires put in place in order to minimize their tax bills and navigate efficiently the tax landscape, setting aside some pocket money. Just to give a bit of background, we can say that Cardone's success story is rooted in strategic investments, most notably into real estate properties, and is known for his ventures like Cardone Capital and Cardone Training Technologies, whereas his knack for sales and his ability into networking propelled him to the top of his game, building up a strong personal branding around its own person. Long story short, Cardone is not afraid of thinking outside the box and is willing to take calculated risk that set him apart in the business world. And now you can ask me how it is possible to stand out and to reduce our expenses and most importantly our tax expenses. Well, entrepreneurs like Cardone often leverage on various methods. There is not just a one-size-fits-all approach, but there are multiple ways to reduce expenses and minimize the taxable income. For example, when investing in real estate, it is possible to take advantage of a tax shield called depreciation. So, by means of simple accounting, it is possible to write off the cost of a property over time, significantly lowering tax liabilities, and this is fantastic. Just to explain it better, we can do an exercise together. Imagine you have revenues for $1 million and zero expenses. If the tax rate will be 30%, it means that at the end of the year, you will have to pay something like $300,000 to the state. That is not peanuts. Now imagine that the following year, your revenues will be flat to $1 million. However, you decided to buy a new real estate property for the value of $1 million. At this point, according to the accounting standards, you can decide to use depreciation in order to spread the cost of your real estate properties along a specific time frame. Let's assume that this time frame is 10 years. In these terms, we can take 10% of the purchase cost and book it as a depreciation in our P&L, meaning that at the end of the year we will have to pay taxes on our $1 million minus $100,000 that we book as depreciation for the real estate investment. By magic, the tax income at the end of the year will decrease from $300,000 to $270,000. And this is exactly how Grant Cardone manages to lower the tax bills.
Flippity flap!
Making investments in order to use the expenses and the depreciation as a tax shield. No rocket science. It's all about maximizing our returns while minimizing taxes. And this is in substance Cardone's approach of converting liquid assets into high-value investments, bringing tax benefits. So win-win. Concluding, here you have it, a general understanding about Cardone unconventional strategies towards investments and tax benefits. This strategy, let's say, cannot be for everyone, but it's definitely got us thinking. And by the way, what do you think about this approach? I'm really curious about your thoughts, so please let us know in the comments down below. But before you leave us, don't forget to like, share and subscribe to support our channel and to get updated on our latest financial insights. Until the next time, stay savvy. Cheers.
Guys that are earning $2 million a year, $1 million, $2 million, $3 million, $5 million, ball players, rappers, big earners, show you a little trick to the wealthy know. Your biggest expense in business, if you got a talent or you got a business, your biggest expense is number one, your taxes. What the wealthy know is how to reduce their tax bill. That's what you don't know that you got to get a handle on. Reduce your tax bill to literally zero and beyond. That's right, beyond. That's where you would get tax refunds or credits going forward to reduce your income tax, federal and state, to zero. How do you do that? I'm going to show you. Anybody can do it. It's completely legal. And if you don't do it, come on. You're just not following the tips of the wealthy. I didn't grow up with wealth.